the big problem that we're focused on solving is the challenge of housing access. So OwnHome was founded in 2021. Now we're a team of 40. We're on the cusp of hitting profitability, what we see as one of the most urgent social challenges in Australia, which is the challenge of housing access, the challenge of housing affordability. So at OwnHome, we're rebuilding the home buying journey from the ground up. And so the reality for younger Australians today is that it takes them more than a decade to save up that 20% deposit. And so what we've seen is that families are crying out for help. The system today is really rigged against you.
Hello and welcome to Fintech Chatter, the show where I connect with fintech leaders for a bit of a chat. Today's guest is James Bowe, the CEO and co-founder of OwnHome. James, welcome to the show.
Great to be here, Dexter. Thanks for having me.
So your Fintech Chatter debut, we've been talking about doing this for a little while. Could you tell our listeners a little bit about OwnHome and the big problem that you solve?
Yeah, and Dexter, it was great to see the shout out and appeal for businesses that were really focused on what we see as one of the most urgent social challenges in Australia, which is the challenge of housing access, the challenge of housing affordability. And so at OwnHome, we're rebuilding the home buying journey from the ground up, starting with the people that are locked out of it entirely. So the big problem that we're focused on solving is the challenge of housing access. And so the reality for younger Australians today is that it takes them more than a decade to save up that 20% deposit. And what they're finding is that the goalposts are constantly moving on that journey. And the reality is, if you don't have access to intergenerational wealth or family support, the system today is really rigged against you. And so our solution is a really straightforward one, but it's also incredibly powerful. And that's a solution where we fund the deposit that banks would typically ask for in order for you to access the lowest possible rates and avoid costly lender's mortgage insurance. And so what we unlock for families is the ability to own a home today rather than a decade or longer in the future. We empower you to have access to the lowest possible rates. And we arm you with a buyer's agent to support you on that home purchase journey. And so that last aspect of the advocacy support that we provide to all of our customers was really born out of an observation as we were focused on that deposit challenge. We discovered that most Australians don't just need support with overcoming the deposit hurdle. They also need support in having the confidence to act and transact. And so what we've seen is that families are crying out for help, not just with that deposit, but with the reality of navigating that property market. How to interpret a price guide, what to buy, where to compromise. And so that's been a really exciting expansion of our vision.
Awesome. So how did the idea for OwnHome come about?
Well, the genesis for the idea in and of itself is not necessarily earth-shattering. I think it's a problem that my generation finds itself thinking about almost on a daily basis, maybe more than virtually any other. How can I possibly achieve some semblance of financial security? And so for myself and Tim, my co-founder, we found ourselves sort of constantly circling this problem of housing affordability and housing access. And I'd say, with a healthy amount of naivety, felt that this was something that was actually in our circle of competence. It was, first and foremost, a financial and legal structuring problem, and one that it looked like there were a bunch of incumbent profit pools that weren't necessarily incentivized to focus on solving that challenge of housing access. And so we set about thinking long and hard about how can we apply our minds to that financial and legal structuring problem, and set to work on building OwnHome.
Despite fintech being around for the last 10 years, the problem's got worse, it's not got better. What do you think kind of now you're kind of seeing with things like product and innovation around product or process and system or legislation, that the things that need to be innovated on to actually solve the problem?
It's a really good point. I mean, the deposit hurdle has been a challenge for many, many decades.
Yeah.
And there's been a whole host of solutions that have come in waves. One of those was actually the government back in 1965 starting effectively the lender's mortgage insurance market. And so that was a public offering. It was only privatized actually in the 90s into what became Genworth. And so oftentimes in some of these enormous social challenges, the government has been one of the first movers into this space. I think we've seen over the last decade that this challenge has become more urgent, and we've seen that it's attracted the attention of all levels of government, but it's also attracted, encouragingly, a lot of private investment into this problem space. I think we saw just most recently an election that was really built around or focused on the challenge of housing access and housing affordability. And there's been a host of sort of solutions that are going to be coming to market, including the expansion of the first home buyer guarantee scheme. I would add, I think it's a no-brainer that we should demand of the government more on the supply side. And as we look at some of the supply challenges when it comes to housing, there's a lot that the government can do there to unlock and encourage supply, not just the demand side. But here at OwnHome, we're focused on supporting people in having access to housing. But we know that that's only structurally effective so long as there's equivalent efforts on the supply side.
So I noticed you used the word access rather than affordable. I guess one of my questions was going to be, every time the government does seem to intervene, it increases prices even further and kind of makes it less affordable. What do you think is I know we're kind of talking semantics here, but I think it's really important. How do we switch the conversation from this thing of affordability, which if you're on the housing market, or if you own a home, you're thinking, well, hang on, that means I've got to lose equity in my home to make it affordable for everybody else. What do you think the conversation needs to be to get everybody engaged and kind of unified on, hey, this is the problem that we're actually trying to solve versus, everybody going off in different directions?
Well, I think both of those challenges are and I do think of them as distinct challenges. The challenge of accessibility and the challenge of affordability are enormous and pressing. I think some of the solutions that try to solve both at the same time with a silver bullet can become incredibly complicated. And so I think some of the government shared equity programs are, I guess, focused on affordability. In the sense that it's not adding necessarily to monthly repayments, and it's expanding the amount that an individual might be able to purchase. But it can become quite complicated because now you've got the government owning a part of your property, and I think we saw some of those policies being made up on the fly of what if I renovate my kitchen? And they're easy, we'll just value the kitchen. And I think when I speak to banks that are being asked to support those programs, they're asking themselves, is this a proposition that we can get behind given its complicated nature for aspiring homeowners? And so I think in this space, when you do try to solve both at the exact same time, things can get complicated. That said, I think there needs to be really dedicated efforts on both sides of the equation there.
One of the other questions I wanted to run by you as well is really around the process that you've got around credit risk management and how you assess people. And I think one of my frustrations, I'm sure you experience this as well as a business owner, is despite the fact that we could be very successful and affluent, we're kind of not considered that when it comes to considering a mortgage. We work in an industry where we've got a lot of people who are what I would describe as the kind of participants in the project economy that might charge huge day rates and go and work for 6 months at a time and earn a lot of money, but then go off traveling for 6 months. And it's very hard for them to show, hey, look, I've got a permanent job and I'm not going to get sacked. How have you gone about the credit risk process with your loan product?
Well, one of the biggest myths that pervades in this country is that if you don't contribute a 20% deposit, you're somehow less creditworthy than someone who does contribute a 20% deposit, say. But the reality is that when 60% of successful home buyers are relying on intergenerational wealth to bridge that deposit gap, that's not a deciding factor in whether or not you're creditworthy in terms of like your probability to default on that loan.
Yeah.
And the great news is that we're not flying blind here in terms of the creditworthiness of lower deposit aspiring homeowners. We've got an immensely rich data set in the lender's mortgage insurance market. And then more recently with the first home buyer guarantee scheme, we actually see the performance of those on the first home buyer guarantee program outperform the broader market. So though, like the arrears rates are far lower than the arrears.
I was going to ask you that actually.
Yeah.
Like, how many claims are there with that lender's mortgage insurance? Because to me, it just seems like the biggest waste of capital going into something that we've seen nothing but house price increases over the last, how many decades?
Yeah.
When is there an instance whereby that lender's mortgage insurance is actually activated?
Yeah, I mean, it's been a long time since I think that industry has seen like large claims. Maybe back in 2008, and I think those lenders' mortgage insurance providers would be the first to acknowledge that even those claims were more a consequence of some like individual bank policies rather than anything in particular. Like if I think about profit pools in Australia and which ones are like what I would describe as lazy profit pools, lender's mortgage insurance to me stands out as one of the laziest profit pools in the sense that it's like something like 5 to 10% of premiums are paid out as claims. Versus maybe like a general insurer where 60% of premiums are going to be paid out for, you know, like a cyclone or flood damage. Yeah. So that's 95% of those premiums are like free money for the lender's insurance providers. And so that's why, you know, Helia, which used to be Genworth, is one of the best performing financial stocks for the last, you know, decade. It has been a free money machine for them. And so to us, like that, as we looked at whether or not there was like a ripe opportunity here, the presence of that lazy profit pool stood out to us as like one where the incumbent wasn't necessarily like incentivized to radically solve this challenge. And two, it meant that there was an opportunity to build a fantastic business with really sound unit economics that was still a far better proposition for aspiring homeowners.
What have you found, I guess, just generally within the industry has been the kind of collective consciousness around solving, because there's a lot of nuance to all of the problems around kind of being, coming up with innovative solutions, and how receptive have you found kind of government and regulators to wanting to actually, solve the problem and recognize that, hey, lender's mortgage insurance is a lazy, kind of form of capital?
My sense is that the capital return for lenders' mortgage insurance providers is largely solving for systemic risk on the part of banks. And it's incredibly important to think through what's the worst that can happen. And we are a credit provider. And so all that our funders care about are the downside scenarios. That's entirely what they're focused on. And that's also entirely what APRA is focused on when it regulates lenders' mortgage insurance providers. But if what we knew to be true is that there was a different type of risk capital that could be applied to this problem that wasn't solving for what lenders' mortgage insurance is solving for. Lenders' mortgage insurance is insurance for the banks. And so the APRA is concerned and entirely focused on depositors with banks and the systemic risk of banks, given that they are one of the most like leveraged institutions in the economy. And so as a result, the capital requirements that they impose on LMI providers are really exorbitant. But that's because they're solving for the systemic risk of the banking industry. What we're really focused on is delivering a fair and reasonable return to capital providers who are funding that deposit hurdle. And we're actually taking systemic risk off the banks. So instead of the banks extending that aspiring homeowner 95% of the value of the property, they're now only extending 80%. And so just to draw that out, under lender's mortgage insurance, they've extended 95%. If there's a property downturn, the bank has to, and they lose some money, they have to turn around and make a claim, just like you would, if there was a claim for flood damage to your house. And so that claim is obviously only ever as good as the insurer is. And so APRA looks at the rating of the insurer versus the rating of the bank and only gives them, X amount of capital protection and treatment. For us, we're actually funding that deposit. So the bank has only funded 80% of the value of the property. So if there's a 10% downturn, there is no claim that the bank needs to turn around and make in order to protect its capital. It hasn't lost anything in that equation. So OwnHome is the risk capital, and our funders are providing the risk capital, and they're taking it out of the banking system as a result.
So when you've kind of taught me through the actual OwnHome business model, we've kind of got some, what I'd say are traditional models, the two-sided marketplace, for example. Essentially, there's a two-sided marketplace where you've got to get funding. So you're kind of working with the banks on one side, customers with the other, which is complex in itself. But you also got this buyer's agent part of the business as well. What challenges have you found in kind of trying to bring all three components together into a kind of a homogeneous solution that actually is going to become a profitable business?
Yeah. So I'd more frame it as what opportunities have we uncovered as a result of this effort. We're really not afraid of service-based businesses in pursuit of building a really differentiated proposition. The way we think about it is we'd be far more fragile if all we were was a capital provider rather than a differentiated service provider. Because then we'd just be in a race to the bottom on cost of capital. And as you go through that crawl, walk, run funding journey, there are typically always players with larger balance sheets, access to lower cost of capital. And so if you want to build a differentiated proposition as a lender, I think it's incredibly important to deliver a differentiated experience. And for us, for both the borrowers that we work with, but now also increasingly the brokers that we work with, the differentiating experience of the OwnHome proposition is the advocacy that they receive from that embedded buyer's agent who helps them on that journey. And what that's meaning for brokers now is actually that they're seeing the power of their clients, where previously they would have played part-time therapist, property analyst, counselor on that journey. They're able to now, so can we do that one again?
Yeah, sure.
Sorry.
Just when you're ready, just go and I'll just edit that question and then kind of cut into.
And so this is what are some of the successes?
Yeah, so just a little bit about the history of the business, where you started, kind of how many people you were, where you've got to now, some of the successes that you've had.
Awesome. So OwnHome was founded in 2021. Now we're a team of 40. We're on the cusp of hitting profitability, which is incredibly exciting.
That is exciting.
It is really exciting.
Yeah.
Thanks, Dexter. And we're now, in terms of some of the more recent successes, we've just recently partnered with some of the largest aggregators in the country. So LMG, Finsure, Connective, and we've got an exciting partnership coming up with Aussie and Lendy that will be shortly announced. And we're 100% focused now on supporting brokers in transforming their own business as a result of some of those distribution partnerships. And another really exciting sort of successful venture is the launch of our own dedicated buyer's agency, which is Peach Property, and is now becoming one of the most decorated buyer's agents in the country, which is super exciting. And
it's kind of it's an industry that's got a bit of a reputation, not dissimilar to the recruitment industry, where anybody can kind of participate in it. And if you've got a TikTok account, you're kind of you're a buyer's agent. What are some of the things that you're doing differently to actually kind of give people a high value experience?
Yeah, well, one of the most exciting things about this business of a buyer's agent is that if I think through what are the benefits that accrue to scale here, they're really clear and compelling on the buyer's agent side of things. What that means is, things like we're able to invest more than anyone into the data that we bring to bear on behalf of our clients. And I think we're seeing some of the most scale buyer's agents in the country, including Aussie and Lendy, making similar investments on behalf of the clients that they work with. And as I think about, like even versus, say, a mortgage broking proposition versus a buyer's agent, say, a mortgage broker, sometimes, the single man operation can get access to the same rates as, say, a 5,000 person organization. But in contrast, a single person buyer's agent might only have access to the real estate agents that they work with in the couple of suburbs around them. They might not have access to the best data in the country. Whereas in contrast, you can really invest at scale in those things that are really important to aspiring homeowners. And we're starting to see the benefits really accruing as a result of that investment. Yeah.
So James, I wanted to kind of shift the conversation a little bit onto your journey and what you've been through as a founder. Before we do that, what was your background before you started OwnHome?
Yeah, well, going way back, I grew up on the Central Coast, so between Sydney and Newcastle. I was really fortunate out of high school to get a full scholarship to college at Sydney University. And from there, actually stumbled into consulting thanks to a chance encounter with Toby Norton-Smith from X15. Who came back to college for, I think, like a novelty debate. And so I actually have him to thank for both, steering me in that direction that was incredibly formative for my early career. And then also Toby to thank for helping, support the vision of OwnHome when X15 invested back in 2021. I spent most of my early career in San Francisco with Bain, working with our venture and growth clients. And so I was really fortunate to be surrounded by the energy of the innovation of that city, but also some of the most capable and successful investors in the world, helping them think through the opportunities that were in front of them. So that was an incredibly formative experience. I had, through university, studied law, but never practiced it. And so I'd say, coupled with consulting, had this sort of healthy, naivety of being able to bush lawyer our way through this opportunity that we saw to both be really thoughtful capital allocators, but navigate the sort of financial regulatory landscape that was required to bring OwnHome to life.
What was the biggest shock for you kind of moving from that consulting environment into a startup?
Yeah, it's a really good question. I don't necessarily know if there's a shock factor versus the boiled frog experience of just, the meetings will continue until morale improves in terms of the daily, stresses of navigating, building something from a pitch deck into something that's supporting.
How did you kind of move through that initial kind of, the analogy I like to use is if you look at a rocket taking off, right? The energy's focused in that one area and you've got to kind of keep it that way to get out of orbit. Whereas it seems to me that a lot of businesses and a lot of early stage businesses kind of dissipate that energy trying to be everywhere all at once and kind of never get out of orbit. So what was kind of for you that recognition point that the early kind of buzz and energy was starting to fade and it was like, man, this is much harder than I thought?
I'd say Tim and I were incredibly pragmatic and focused on the journey. And we knew that, the highs were never necessarily as high as they felt and the lows were never as bad as they might have felt in the moment. And I'd say we each help each other keep a fairly even keel. And that co-founder dynamic is incredibly powerful.
What's Tim's background?
Tim's background was investment banking at Macquarie.
Right.
And then Fintech running the Middle East for TransferWise, which is a global payments company. Yeah.
And so I guess that with both neither of you being kind of tech founders, What were the challenges that you had from, that side of things? Obviously, kind of strategy, operations, capital, very strong natural skill sets coming from you both, but on the tech side, perhaps not. How did you bridge that gap?
Well, we, there is that saying that the team you build is the company you build.
Yeah.
And we were incredibly fortunate to come across some just absolutely cracked engineering talent really early in our journey. And as a fledgling startup, you do have to find talent that others are either overlooking or can't fully appreciate. Yeah. And so our now CTO joined us, I feel straight out of university, but had been working during university at Macquarie and Westpac, and has to be one of the most formidable technical minds that I've ever had the pleasure of working with. And it's been amazing to see the engineering team that he has built around him. And for us, that's starting to take us into an entirely different direction and set of opportunities as a business, where other lenders are actually now starting to ask us, what would it look like if we could license the platform that OwnHome has to power it?
So kind of white label type solutions. Yeah.
Yeah, and that's more a consequence of the serendipity of finding one incredible technical leader who has built a phenomenal team around.
It's a great example because, I've been trying for this last decade to really shift, the thinking of founders around hiring and recruitment to be more of a professional sports team than what they've ever accustomed in the corporate world. And if I give some examples, we've seen the Moneyball movie. There are Premier League clubs in the UK that they've got teams of data analysts that literally just scour the world and find these special talents who they buy for a few £1 million and sell for £100 million. That's kind of I think a good example, but the challenge still becomes as founders, how do you recognize within somebody that potential? And I've kind of, whenever I've asked the question, it's usually gut feel or I've worked with them before. What were the qualities that you were looking for in those kind of formative team members that you look back and go, right, kind of this now has to be the the benchmark or the kind of the criteria that we set when we're looking to bring people into those kind of mission critical positions?
I wouldn't necessarily. I'd say I'm like any founder where I do not have 100% success rate in nailing it out of the gate on the talent that we recruit. But it feels like we have a team that's now that is 100% successful for the culture that we've built, and that requires thoughtful coaching along the journey, not just that initial talent spotting, so to speak. But in terms of the talent spotting and identification of what's the signals of excellence that we look for, certainly one is batteries included. That's a question that I'm constantly asking myself as I'm speaking with people is this someone who comes with batteries included, or am I going to have to be the one that's providing the energy?
Right, got you.
And I think for myself now, I'm incredibly lucky to be surrounded by a team that all come with batteries included. Yeah. And that's incredibly energizing and really nourishing.
Yeah.
And so that's certainly one. Does this person have batteries included? Two would be a bias to action. And that can be hard to detect in a interview context.
Yeah.
But it typically, in my experience, reveals itself pretty early on in someone's journey. And so I think things as straightforward as bringing people in for a 3-day work test for our engineering team is an incredibly effective way to understand, does this person have the bias to action that is really critical in a small team. We're not a 40,000 person bank. Yeah. There's real ownership that comes with every single role here at OwnHome. And as a result, it's going to be incumbent on you to have that bias to action to sort of like move the needle every single day. Certainly low ego, but still incredibly high standards. So being like really proud of the work that you deliver, but not necessarily like crowing about it from the rooftops.
Yeah.
And then I think, we've already talked about it, but resilience.
Yeah.
Like one of the books that we give to everyone who joins OwnHome is Anti-Fragile. And we think about that in the context of like both the business model that we're building, but also in terms of the team that we're building, because as you would expect, like it's not always up and to the right.
Yeah.
And so it's really important to find people with resilience for that journey, because we're working on really hard problems.
Yeah, and that kind of resilience with the growth mindset piece is, I guess, essentially the concept of anti-fragile, right? That kind of what doesn't kill you makes you stronger, right? Like that, not just makes you stronger, but you're able to flourish in those times of where everything looks dark and grim.
Yeah, I think it's you mentioned growth mindset, like Carol Dweck's growth mindset, I think is a fantastic book that I'd recommend to anyone. And like one of the sort of like main takeaways of that book is like, am I someone who is like at cause, or am I someone who is at effect to things happen to me? Or do I have agency and I'm actually able to impact the world around me?
Yeah, I think it's critical now that you look at what's happening in the world, and particularly with AI. To me, it really does kind of signal the challenge that founders have, in that you're actually, it's not so much that there's a talent short market, it's just that the mindset that you're looking for and that you require is only prevalent in 10% of the population, right? Like, or the workforce, the other 90% have this kind of social contract where I'll do just enough so that you don't sack me, and you're going to pay me just enough so that I don't leave. And that kind of works in a corporate environment, but it doesn't work in this type of environment.
Yeah, I think part of the challenge there on that 90-10 split is that not that 90% of people find themselves in an environment that's not conducive to them feeling like the 10% who are absolutely relishing the work that they do every single day.
Yeah.
And I think there's like far too few like mission-oriented businesses in Australia that are scaling up.
Yeah.
And it's a small founder community in Australia, but it's an incredibly generous one. And my sense of all of the like founders that I have the pleasure of interacting with in Australia is that they are overwhelmingly mission-oriented.
Yeah.
And I hope that they continue to thrive and flourish so that more of the workforce has the opportunity to experience like how impactful
and I think the challenge is kind of with that mission comes what's the quote in Spider-Man, with power comes great responsibility, right? And I think with a mission comes great accountability. And I think that's what a lot of people kind of tend not to sign up for is, hey, I want to, the purpose, but that purpose comes with sacrifice and accountability. And I think that's where there's perhaps a challenge, not just here in Australia, but I think just kind of generally that, you try to kind of fix everything, whether it be your personal life, your work-life balance and all of those things. That's kind of not, to my experience anyway, it's not how it works. I've just had to try and figure it out. And sometimes I have to sacrifice the family, and sometimes I have to sacrifice the business, and sometimes I have to sacrifice my health, and sometimes I have to sacrifice my wealth, right? And that's just the nature of trying to get to an objective. It's a bit like climbing Everest. It's not a linear path and a ladder, or you get the helicopter to the summit. You're kind of traversing up and down and across to try and get to the goal. Yeah,
I agree. I think it's I think we all wish there were more businesses being started in Australia that were tackling hard problems.
Yeah.
And it does feel rare the profile of person who's really up for the ups and downs of that business building venture. Like, you know, you yourself have embarked on that.
It's kind of when I'm talking about it, I'm thinking, they're probably the sane ones, right? In terms of the culture that you're building here, you kind of getting to that point, 40 people. Usually when you get to 50 to 70 is where the growing pains start to happen. Have you kind of started to see any change in, you know, that kind of earlier phase of the business where you're thinking, hey, this is starting to feel different now, and perhaps we need different types of people for this next phase of the journey and this next growth?
It's a good observation. I think the breadth of role that we are now looking for is broader.
Yeah.
And the backgrounds and experience that we're looking for is more varied. One thing that we're all as a leadership trying to be really mindful of is that we're still being really thoughtful about identifying the signals of excellence and the spikes of the values that we really care about. It's just that they will likely show up in different form versus our own experience. So as we sort of look to grow our sales team, what are the signals and spikes of excellence that we should be looking for?
Yeah, and then I guess as a leader yourself, right, it's hard to remember 50 names. 60, 70 gets harder, 100 gets even harder. How do you then filter down kind of, you know, the spirit and kind of, you know, the culture itself so that, you know, it lives by itself rather than it's kind of determined by you and you kind of enforcing it?
Yeah. I mean, one of those elements is that concept of sort of batteries included again. And so if every single person here can be sort of like a flag bearer or a torch bearer for the culture, then that it makes my life a lot easier. And I think we're really fortunate to have that kind of self-reinforcing culture. Every single person at OwnHome is a part owner of the business, and the ownership that I see everyone bring to bear is enormous and immense. And it does feel like I share that we're very non-hierarchical in the sense that we embrace the concept of sort of like a super individual contributor. There aren't middle managers who are just managing people. You're first and foremost accountable for individually driving results. You'll likely work with some other people in pursuit of those ambitions. But the accountability is really high, across the board.
So James, you've been in the fintech industry now coming on 5 years. What are your observations of where we're at now, and what do you think we can be doing differently?
Yeah, I think as an industry for fintech, we're at a moment of real clarity, maybe even maturity in fintech. I think the hype cycle is behind us. I think the easy capital's gone. I think what's left is businesses that are solving real problems with a differentiated proposition. And so ones that have really strong unit economics, they've got great customer love, and are either profitable or have a really clear path to profitability. I think for founders in the fintech space, I think that can be a real gift in that you're forced to focus. You're forced to make real trade-offs. And because I think what's clear is you can't, raise your way out of a broken model. And so encouragingly, it was only this week that I think Ramp in the US is raising at a 21 bill valuation, 30% up from a year ago. And so I think sometimes there can be a lot of lore around the best days of fintech are behind us, but we only have to look here in Australia and see the phenomenal success of Airwallex, one of our most successful current private businesses in the country. That said, there's a massive amount that's rapidly changing. I think there's a lot in the credit and lending space. I think there's a lot of businesses that were built around the idea that efficiency was derived from hiring offshore talent. And I think that's either getting swept away or about to get swept away as sort of the tide recedes, and that tide probably being driven by like this AI wave that we're, and this agentic era that we're now living through.
Yeah. It's interesting if you look at, the kind of where the funding is happening as well, certainly here in Oz, it's going to those, I think, businesses that are solving big, complex problems. And, I agree, I think the kind of, that first phase of fintech, not just the hype cycle, but I think where the model was regulatory arbitrage or, fee arbitrage, those opportunities kind of go pretty quickly, and you then have to focus on what I'd say is real innovation.
I think that's right.
How do you innovate on the product? Right? Still, despite making it faster and a little bit more efficient, it's the same loan product that I could have got 70 years ago. How do we evolve that? And I think this is kind of really where businesses like OwnHome are really coming into their own, if you excuse the pun, that there's now this, this is kind of the price to entry, or the ticket to entry is you got to solve something that's big and complex that can't be done by just AI or can't be done by an offshore team. And, the kind of, it's not an arbitrage opportunity. It's actually an innovation opportunity. Challenge though, is for kind of founders like yourself, is that Australian investors kind of tend to shy away from innovation and want to see just returns pretty quickly, which I think is, to me, I think is one of the things that really fascinates me about your business model, is that the buyer's agent piece I can see as being, almost like a traditional services model that you can quickly, low capital, high return. It comes with risk, but it's something that you can very quickly get cash in the door. Whereas a lending business, it kind of takes years to really truly understand whether the product itself is working or not. And so I think that kind of innovation around how do we bring different business models and bring them together and have kind of revenue streams that will come from that, I think is a really, to me, smart move, particularly given the challenges that founders face here in Australia. And I think we have to look at, Australia not being the US, right? So we can't take the blueprint from there and apply it here. There are things that we can take, but I think we have to kind of mix and match and create our own, kind of business models that work in this environment with the resources that we have.
I think that's right. I mean, in my experience, we do have really visionary capital providers. Like, I think of our largest shareholder, SquarePeg.
Yeah.
Paul Bassett, one of the most successful founders in the country, the DNA of that.
I think the challenge though for them is that just fintech it's a hard place for a VC to play because of the regulatory capital that typically has to go into that, not investment capital, but just sitting on your balance sheet for a loan book. It's really difficult to kind of, for their model to kind of, play in that space.
I think that's right. Like for us, that part of like our journey is how do we make sure that we are incredibly, and I think this is true for any Australian success story, is overwhelmingly Australian success stories are very capital efficient. If you think of Canva and the total capital raised, it's not your Uber or your Snapchat that just has 15 years of like deep negative cash flows. And I think that can be a real blessing. It forces you to think differently about the capital that you have raised and how do you make that go incredibly far in service of what should be a really bold and grand vision. But that negative J curve, I think for many Australian businesses is a lot shallower.
Yeah, and look, I agree with you, and I think what it does is it creates, in Australia, I think, our culture is one of entrepreneurship. We've got 2.5 million businesses, or business owners, I should say, in Australia. That's 10% of the population, not 10% of the workforce. 10% of our population is a business owner, whether that be a small business, a medium-sized business, or a startup founder. So I think within that DNA, what we do have is a natural talent pool of people who will go out and solve problems for profit, which I think kind of lends itself to what you've said about the capital models as well. We're coming to a wrap. Before we do, where can people find out a bit more about OwnHome?
Yeah, they can find out more about OwnHome at ownhome.com. They can find out more about our buyer's agent at peachproperty.com.au, and they can reach out to me at james@ownhome.com.
Awesome. James, it's been fantastic to have you on the show.
Thanks, Dexter. Wonderful to join you.